Hi, Lenore Cabrera here. You'll have to excuse my nasal sound. I'm getting over the flu. I wanted to walk you through the practice exam. So, as you can see on the left, I'm asking you to complete some journal entries, prepare a trial balance, and then prepare the closing entries. So I'd like to walk you through some of the tricks that you can use. So you can see on the left, we have the questions, and on the right, we have the solutions. So the first one, brothers invested $110,000 in the business. Key on invested. That means we're going to be using contributed capital, and they contributed cash. So it's a debit to cash and a credit to contributed capital. B, the van is being purchased. So as you can see on the right, the debit is to van, the credit is to cash in the amount of $5,000, and the second credit is to notes payable for the difference between the two. C, you can do one of two ways. You'll notice that there's dog sales, and we're told they're all cash, and there are cat sales, and we're told they were put on account. So I did a C1 and a C2, a debit to cash, because cash came in. And the credit is to the revenue. This is a pet shop, therefore it's dog sales. And then for C2, it's a debit to accounts receivable, because these customers will pay us, but in the future. And the revenue were cat sales. So it's a good idea to use more detail than less detail. Just adding a revenue account, that's not detail enough. So try to be a little more detailed when you're choosing accounts. D is about dividends. So dividends are contra equity. Contra equity increases with a debit. So here you can see debit to dividends and a credit to cash. So if you key in on the word paid, then you'll know that that's always a credit to cash. That means cash is going out. E, the following bills were paid. Again, paid indicates cash. So you can see that's the total of all the bills. And I'm being very specific here. We have telephone expense, utilities expense, and rent expense. For F, rather than paying them, we've put them on account. Since the relationship is between the corporation and a vendor, that should clue us into accounts payable. So here we can see we debit advertising expense, debit gas and oil, and credit accounts payable. In G, the brothers have actually hired someone. The debit is to salary expense, and since they paid her, again, key in on that word, the credit is to cash. In H, it appears that the brothers are doing very well. They have a new revenue source, kennel service, and it says that they've generated cash. So that means cash came in, that's a debit to cash, and the credit is this new source of revenue, which is kennel service. So those are the few words to key on when I ask you to actually create journal entries. Join me for part 2 in another video.